One of the biggest names, if not the biggest, at least when it comes to hedge funds, Steve Cohen, now unshackled by the SEC after being suspended for 2 years from the hedge fund industry. He's starting off the new year with a bang as he prepares to open up a new Wall Street firm. What can we expect from his return? Do investors who are watching follow what he's investing in, Charlie? What's going on?
They do, and here's what we know. We'll get to some of the headlines, and we'll try to unpack this a little bit. Steve Cohen was the greatest hedge fund investor of his time. The firm was shut down in 2013 after an insider trading investigation. It was known as SAC Capital back then. He has since reemerged, managing his own money since he's barred from the industry because of all this. He himself was never charged with insider trading. Failure to supervise is what the feds nailed him on, meaning the Securities and Exchange Commission. That failure to supervise charge brought a 2-year ban. The 2 years is up. From what we understand, that Steve Cohen is going to come back to the public hedge fund business sometime this quarter. It could be any day now. I hear it's this quarter. I'm giving myself a little wiggle room, so that's 3 months I have to get this right. So we hear this quarter after what's essentially been a 5-year hiatus. Even though it was a 2-year official ban, remember, the firm itself, SAC Capital, was shut down. Was basically charged with insider trading and shut down. Never him. So 5 years ago, that was 2013, and now he's back. We understand he's going to open up something called Stamford Harbor Capital with about $4 billion in outside money. And here's another interesting shift. A lot of people thought it was going to be larger, so he's keeping it small. I think he wants to fly a little bit under the radar screen. The other thing is that he's shifting away from trading on what's known as proprietary information. It's the stuff that no one else had. That trading on that information and arbitraging that information
what got him
into trouble. I hear he's going to be more focused on quantitative, computer-driven models to do his trading. So that's a key change right there. The other thing that I think is a key change. Remember, he had astronomically high fees in the past. 3 and 20, 3% management fee. Excuse me, 3 and 50.
Oh, 3 and 50.
He had 3. Everybody has 2. They charge you a 2% management fee. Then they charge you 50%, 20% of the profits. He used to charge you 50. I understand that his performance metrics, his fees are going to be based on some sort of performance metric. So it's not going to be just a flat 3 and 50. You know, it may be that, but it'll be based on some degree of performance. At least that's what they're telling. We should point out that Cohen himself has no comment on this. I ran all this by his PR guy. Remember, last week, I don't know if you remember, I tweeted out that he's going to raise between $3 and $5 billion. That set off a little bit of a frenzy. Other people have been reporting that he's getting back into the game. But we could say pretty clearly that the sort of how can I put it? The intention of Steve Cohen right now is to start this thing this quarter, maybe this month, with $4 billion in outside capital, and it is the return to the public hedge fund business that the guy that was one of the greatest traders of all time. You know, and actually, I know the guy, decent guy.
Well, we ran into him in Vegas last year at the Salt Conference. He was so nice.
The sweetheart. And
I was surprised he didn't run screaming from us.
Especially
because most people do.
You know, I wrote a whole book about him, about the government's attempt to nail him, and my book, historically stood pretty well. He was the white whale. It was hard to get him. They never really got him. They never charged him criminally. They took down his firm, but now because they didn't get him criminally, he's back.
Charlie Gasparino, thank you.
Anytime.